today at our webinar, and today through these few hours we will try to navigate capital and different source of funds, tax structuring, corporate taxation, and form of business presence for companies who work in a dual use sector, and answer all questions that you have, both for our participants in Zoom and in LinkedIn. I will encourage you to ask your questions in the chat or comments. We will try to answer them as best as we can. My name is Tatiana Koncharenko. I'm business advisory partner for Crowe Mikhailenko, and together with me, I have Svetla Marinova from our Crowe Bulgaria, and Anton Doktorov, who's leading expert for research and commerce practice, and also Dmitry Mikhailenko, manager partner of Crowe Mikhailenko, will join us a little bit later. So we will have 4 parts of our webinar, and we will start from doing business in Bulgaria part, then we will go to capital options and structuring for that, then for tax structuring and grants in the end. So Svetla, let's start from you. I know you have a lot of interesting topics for us.
Okay. Well, dear guests, welcome to our webinar. In the next 20 or so minutes, I will share with you some facts about Bulgaria, which, in my view, make it an attractive jurisdiction from where to operate a business, bearing in mind the focus of this webinar, the business in the dual-use industry. I will start with some general information about the country. It is a member of the European Union. It is a member of the NATO, and thus allows to Bulgarian companies access to EU funding for innovation and growth, access to the Defense Innovation Accelerator for the North Atlantic. We are a member of the International Monetary Fund, the World Trade Organization. We have joined the Artemis Accord, the NASA-led project, and the country is on the roadmap to OECD accession. Since January this year, the official currency in Bulgaria is euro, which makes quite easier to trade across the European Union. The country is also part of the Schengen area, and generally there are no foreign exchange control imposed, though some reporting requirements exist. Just before I continue, I will share with you that my presentation will be far more informative than my narrative, and that is because we have a limited time during this webinar, but the presentation will be shared afterwards. So it is for the benefit of all participants in the webinar. So you will have the presentation and you may ask questions even after the webinar. To start a business in Bulgaria, there are several options. It can be through a subsidiary in the country. It could be through a permanent establishment. From our experience, we see that the most common option chosen by foreign investors is to set up a limited liability company, which is a very straightforward legal form to establish a legal person in Bulgaria. It can be established by one shareholder or more, by individuals or companies, by residents or non-residents. A bit more complicated legal structure is through the joint stock company, but again, it can be established by a single shareholder or more shareholders. And some investors also choose to set up a branch in Bulgaria, which is also fully capable of doing business, but the branch is not a legal entity. So if any ownership of assets are concerned, they will be legally owned by the principal company. The permanent establishment option is chosen more or less when there are distinct projects done in the country. So this form is suitable for investors who want to perform to execute the project and then to exit quickly from the jurisdiction. Bulgaria is famous for its low corporate income tax rate. It is 10%. The tax year is the calendar year. The corporate income tax system is generally not very complicated, and it's rather straightforward. Basically, Bulgarian resident companies are subject to corporate income tax on their worldwide income. And of course, when some income is generated abroad and tax is paid abroad, there are mechanisms to deduct that tax from the tax liability in Bulgaria. Non-resident companies are liable to corporate income tax for the profits gained through a Bulgarian permanent establishment. There is no group taxation in Bulgaria. Each taxpayer is taxed separately. Tax losses may be carried forward for 5 years. Carryback of losses is not permitted. Capital gains are not subject to a separate kind of tax. They are generally included in the income that is included in the tax base for corporate income tax. And the filing is on annual basis. The calendar year, as I mentioned, is the tax year. So the reporting is until the 30th of June of the following year, and correction of the submitted tax return is allowed once until the 30th of September. It is interesting that from this year, a new tax incentive was introduced in the Bulgarian corporate income tax legislation, and it is the incentive for research and development. Eligible for this incentive are 3 types of activity: fundamental research, applied research, and development. Apart from that, there are no further details regarding the qualifying expenses. So these may include salaries and social security payments for the staff engaged in R&D, fees for external services, etc. But most probably everything will be very much depending on the proper documentation of the expenses to prove that especially the expenses are related to research and development. As long as the expenses are properly documented to be research and development, the law allows additional deduction of 25% of the actual expenses, or when the research and development activity results in an intangible asset, the law allows the tax depreciation to be accrued on 125% of the expenses. It should be mentioned that in addition to the corporate income tax, certain companies may be subject to the so-called top-up tax of 5%. That is in relation with the OECD-led project known as Pillar 2 for the minimum taxation of 15%. But this additional tax leading to 15% effective tax rate is applicable only to Bulgarian taxpayers that are members of multinational group with more than 750 million revenues in the consolidated financial statements. So basically, this taxation is limited to very large corporate groups. This year, 2026, is actually the first year when Bulgarian taxpayers, which are in the scope of this kind of tax, are submitting tax returns and paying this additional 5% top-up tax. So the practice is already being accumulated, and the tax authorities working around it, as well as the tax consultants, as well we do this. And if there is need, we can assist with this kind of tax. Apart from the taxation of the corporate income of resident taxpayers, foreign investors are very much concerned by the withholding tax that Bulgaria imposes on their income generated from a Bulgarian source. And these types of income are dividends, interest and royalties, technical services fees, and capital gains. Generally, the rate for dividends is 5%, and for the other types of income, the rate is 10%. But these are rates under the national law. When double tax treaty provides for a lower rate or a full exemption from withholding tax, the double tax treaty may be applied, so the Bulgarian withholding tax can be reduced or avoided. Also, it's worth mentioning that companies that are tax residents in the EU or the European Economic Area may benefit from exemption from withholding tax on dividends or on interest and royalties on certain occasions, subject to certain conditions being met, in accordance with applicable directives for the European Union. This is the directive, the parent subsidiary directive, and the interest and royalty directive. So basically, there are options to go around this tax, but each case should be reviewed separately. As far as double tax treaties are concerned, Bulgaria is party to 71 double tax treaties, including with Ukraine. It's worth mentioning that there is an effective treaty with Malta, which was signed about 25 years ago, and a new treaty has been signed recently, but has not yet entered in force. So once the ratification papers are exchanged, we are expecting a new treaty to enter in force maybe next year with Malta. Bulgarian legislation imposes a certain administrative procedure for the application of double tax treaties. The main point being that the foreign recipient of the income should provide certain documents proving the tax residence of the recipient and the beneficial owner of the income. If the annual income is up to 255,000 euro, the documents are provided only to the Bulgarian payer of the income, thus allowing application of the more favorable tax treatment and avoiding withholding tax. But if the annual income of the foreign company recipient exceeds 255,646, then the documents should be presented to the tax administration to review and to issue a formal clearance to apply the treaty. And it takes a little more time and complexity. Bulgaria has legislation around transfer pricing. The main rule being that every Bulgarian taxpayer should prove upon tax audit that their dealings with related parties are done at arm's length, which meaning in accordance with the market, in accordance with conditions that would have applied if the dealing were between independent parties. Apart from that general rule, there are certain conditions, certain thresholds, which, if they are met, would trigger obligation for preparation of transfer pricing documentation. It is generally in the format of the OECD, preparing local transfer pricing file, keeping the copy of the master file of the group. But what is interesting for Bulgaria is that such documentation is not needed to be submitted, formally submitted to the tax authorities. It should be also only prepared and kept for review when requested in case of tax audit. Nevertheless, there are deadlines in the law for preparation of these transfer pricing documentation. And if an audit starts and the taxpayer cannot provide the documentation upon the tax authority's request, it is presumed that the statutory deadline was not met and some preparation of the documentation and some penalties may be imposed. Bulgaria applies value-added tax on its as an indirect taxation of consumption. The Bulgarian system for VAT is harmonized with the requirements, VAT requirements of the European Union. So generally it is 95% probably similar to all to the VAT systems in the other EU member states. The standard VAT rate is 20%. 0% or 9% reduced VAT rates apply in specific cases explicitly mentioned in the law. Every taxable person established in Bulgaria is required to register for VAT upon exceeding the threshold of 51,130 euro. But our practice and our experience shows that when foreign investors establish their subsidiaries in Bulgaria, they prefer to register from day one, even if there are no sales immediately, just to avoid the nuisance of monitoring this threshold and risking to miss a deadline. When a foreign company performs a transaction, makes a sale of assets or services that under the VAT Act are treated as being with place of supply in Bulgaria, there is a requirement for the foreign company to register in Bulgaria for VAT even before the transaction is done and regardless of the value of that transaction. Similar to the VAT system in the other European EU member states, there are certain supplies that are VAT exempt, such as sale of agricultural land, letting out of building for residential purposes, financial services. But in such cases, the provider of such supplies does not have a right to VAT deduction on the related purchases. The VAT reporting system is on monthly basis. There is no annual reporting in Bulgaria for VAT. The tax returns are submitted by the 14th day of the next month, and within the same deadline, the VAT for payment, if there is such for the month, should be paid. Trade in goods within the European Union is subject to intrastat reporting, but only after certain thresholds are met. And the thresholds are established on annual basis. And in my presentation, I have put the thresholds for this year, for arrivals and for dispatches. The intrastat reports are also submitted by the 14th day of the following month. I have decided to include in my presentation also a slide with the basics for personal taxation, because individual owners of businesses might be interested in these aspects of Bulgarian tax system as well. Bulgarian resident individuals are subject to 10% flat rate, a tax, a personal tax at 10% on their worldwide income. And most of the cases, the local residents are required also to file annual tax return. Non-resident individuals are taxed in Bulgaria for Bulgarian source income through advanced taxation, and normally are not required to file a Bulgarian tax return. Bulgarian tax residence can be obtained through one of the three criteria, either permanent address, which implies 5 years legal residence in the country, or residence for more than 183 days in any 12-month period, or having the center of vital interest in Bulgaria. Also, some social security obligations may apply if there is some certain activity, certain active, some labor activity or consulting activities in Bulgaria. But generally, passive income is generally outside the scope of social security. And just for completeness, I have mentioned also some other taxes relevant in Bulgaria: the real estate tax, which is levied on the ownership of urban land or building; transfer tax, which is imposed on sale or exchange of immovable property and motor vehicles; and donation tax. And with this, I would wrap up my presentation, and I'm open to questions now or after the webinar, as you wish.
Thank you so much, Svetlana. For now, we don't have questions, but I think we will get back to this as soon as they will be, okay?
Okay.
Thank you so much. Let's go further and talk about we are having in dual use in Europe. For me personally, Bulgaria now definitely a good option for establishing a company, thanks to Svetla and our colleagues there. And I want to talk to you about map of European defense and dual-use venture capital landscape, who pays at what stage, and where European founders go wrong sometimes. And let's see what options do you have. Do you see my presentation? Yeah.
Yes.
Great. Yeah. What we definitely see now through last years, a lot of new options are available for dual use and military tech in Europe and USA. One of the biggest turnaround points was to understand that investment in dual use now not an option that you can just choose. It's something you need to be inside to be successful in the future years. From investor point of view, it became crucial, and now what we are seeing, it's a lot of investment firms with more diverse funds who was focused on deep tech and different other topics, choose to have separate fund or even part inside existing funds dedicated to dual use or defense companies. Bigger number year to year. It's mostly in 4 times bigger than it was before war in Ukraine started, and few options that you need to understand that we are growing exponentially, not only in US market, but also in EU market. And there are a lot of different options of financing for different types of companies in dual use. So the shape is constantly not smooth curve from 2 billion into 2020, it's 8.7 billion in 2025. And 1.5 billion, it's pure defense. The rest is dual use, security, resilience, this type of companies. And these definitions really matter when you read the headline, because a lot of clickbaits try to show how it looks like. And what we really see, one structural fact. Rounds bigger than 10 millions. Oh, sorry. Something went wrong.
I
Sorry.
didn't want to oh yeah, now we see. Didn't want to interrupt.
I'm sharing a lot of numbers with you and believe that you see them. So, okay, 8.7 billion, it's rounds in 2025. It's pretty big difference. So for last few years, this market only have much bigger amount of investment and much more mega rounds. So dual use defense companies have a bigger round for each company. And we all know through newsletters and so on that US have most of budget in NATO, and we have all these discussions inside NATO countries, how it will be divided and so on and so forth. But does investment reflects this percentage? In a way, yes, but only in a way, because yes, US market is typically bigger in all types of investments, including dual use and defense. But diversity of options and dynamic of growth showing that EU market also growing, and in a way even more fast and more achievable. So most of money that you will see in any reports, it's mega rounds. So it's companies that was big 10 years ago or 6 years ago and just getting bigger. And only small amount of all this investment go to newcomers and companies that emerge through last 5 years. What does it mean for us? Is it mean that new companies get less money or doesn't get them at all? No, it means that this huge market left 23%, but it's still millions for smaller companies. And what we also see in Europe now that dual use and defense became a backbone of European financial focus for last 1.5 years, let's say that. So 21 specialized funds. Now it's was before 2022, and now it's much more specialized funds. And as I said, a lot of different funds that was sector agnostic or had few different focuses now have dual use and defense inside. Also bigger checks for this type of companies and shorter cycle of proof and finance. If we're talking about where capital lands, it's a tough question because where business good and where investment good, now in a way not the same thing. So you can have a great infrastructure for development, good R&D basis, and good cost efficiency, but will not be able to raise money. And on the other hand, you can raise money and do not have all your R&D and testing facilities in same place. But nevertheless, what country you choose, you will have access to pan-European and NATO programs and funds who look into whole territory. But also, if you can choose countries where they will support exactly your direction of business. It's also really important thing to do because it's not only choosing a country, it's not only choosing a place where you will be structured, it's also about choosing ecosystems that supports or do not support you. Also, interesting point that M&A is really growing through last years. It's not yet European IPO for defense tech, but as you know, there was at least few IPOs in US. And for now, M&A is considered one of the great options to raise capital to become a bigger company, to buy access to markets. And where we can go to raise now. Anton will walk you through details of grant options, and for new companies, grants really show a huge potential for basic development of technology, the application and testing. And as you will know after his speech, there are quite a few different local and international grant support programs that can give you not dilutive financing for your dual use company. Second point here, it's specialist equity when you have funds that not only gives you money for your seed Series A stage, but also support you in business development and technology development, certification, and so on. And growth equity, also there are new faces here, as well as big players as A16Z, who have now big chunk of their money dedicated to dual use. And when we talk about institutional capital, it's also a bit of a change and additional options for investment attraction. It's, for example, NATO Innovation Fund. It's a huge institution dedicated to development different technologies and capabilities of NATO countries. It's much bigger scale of investment and few additional options. It's not only direct investment into the companies, but also fund of funds. So NATO Innovation Fund invest into fund managers who have experience and understand how to invest into dual use and defense. And therefore, they are capable to distribute this capital. So this 1 billion does not go only into direct investments, it also go into funds and then into companies. Also a little bit to grant size, EUDIS, European Defence Innovation Scheme, important not only as an option for a grant, but also as an instrument to show your capability in European Union and Norway, for example, to work in a proper way on dual-use technologies and make step forward into European countries' legislative system. European Defence Fund, it's also grant scheme, huge one, and typically for investors, it's a good option to see who are able to develop their technology to level 3.5 TRL and then go for prototype and qualification work toward production. And these grants typically include a few companies and shows capability not only to develop technology, but also to work together. That became clear sign that you are capable to show effectiveness. So also one of the interesting turnaround points for less time, it's European Investment Fund. It's fund of funds that built for a special form of investment and have defense direction. So now it mobilizing 500 million total euro and will scale to 1 billion. So it will be around 20 specialized funds and definitely dual use will be big part of it. If we talk about great step-by-step strategy, it will be have a grant and have foot on the ground in a country of your choosing, a deep integration in ecosystem of this country. Also, other part is different mechanisms of investment attraction as a safe. And then took investment for next round of development. If we talk about special VCs, we have quite a few in our focus. Project A, for example, biggest fund for now. 325 million, largest special fund up to date. They are operator-led and embedded in Munich Neoprime cluster. The start moment is to tell a partner and general manager our Stark CEO, and now it's a really deep dive from experience in real market into investment. So this type of switches we will see more and more. And as you see, it's 15-20 deals per year, 1 to 8 million in one check. This is a fifth fund for them. Joint capital. The next one, they mostly in dual-use security and space. They have representation in Berlin, London, and Milan. Their third fund targeting 235 million. And they are part of EIF, and they have EIF as a main anchor investor for 50 million. They focus on asymmetric advantages. It's technologies that create both the deterrence and economic growth. Next one, AVP plus early bird, E2D. It's a comparably new emerge. It's a joint venture of two platforms, 500 millions and 25 million a check. And they will close in a few days, we hope. Their thesis is 85% problem itself, built to keep capital, talent, and IP in Europe. The main prioritize spun microconductors, HPCs, new space, effectors, directed energy, subsurface, and maritime. Additionally, three more specialist funds, three theses, and three different geographies. Expeditors in Warsaw, Firjay and Castro. It's a second fund, Sto plus millions. It's a CE syndicate, and their focus is dual-use cybersecurity. 201 ventures in Madrid, lead by ex-CIA Eric Schlesinger, converse the European Defense Investment Network, so bring a big expertise in defense sector. And Keen Venture Partners, it's Amsterdam, institutional gravitas, ex-NATO and ex-Dutch defense. Three more specialists. It's MD1 in London, first European fiduciary early stage dual use strategy. Also, it's interesting point that a lot of new funds emerged. They lead by first-time fund managers, but with good background in the field. So people from top positions in NATO, European Defense Fund, different military structures, switching into investment and try to find target companies who be able to take this money and their expertise to grow faster and more efficient. MD1 early stage dual use. Alpine Space in Munich, it's Bulent Alan is GP. He's ex-SpaceX, and their main backbone it's space industrial. They are supported by EIF and NIF. Plural. It's Tallinn and London, two main points, founder-led fund, 100 million platform, and raising 1 billion for fund 3. As you see, there are a lot of different investment players now who already have pretty big funds dedicated to support dual-use defense and space in Europe. Do not treat their representation in one of the financial centers as the main focus country. Most of them looking into companies throughout Europe and NATO countries. So you can be a Polish or a Bulgarian company, and you will be in their radar if you have technologies that worth financing. Let's look into generalist and US capital. Here we have a few interesting players. It's 4 of them are European generalist and look into defense as a priority now. General Catalyst Global Resilience Thesis led Helsinki B and C. Lakestar, led by Klaus Hommel's Sovereignty Hawk, and they have around 300 million defense fund forming now. BA invested 25 SLP into them. That's also a good option to watch for where LPs going with that. Belgium's first ever defense deal in 25, lead quantum systematic C extension, and Atomico put sovereignty center stage in their 25 year report. All three of them are pretty big and maybe not so great for you if you are early stage now, but you need to keep in mind that when you go for your round, for example, seed round or A round, you need to see what will be next for you, and these four could be a really great option for next steps. So also, another big checks. Anderson Horowitz, it's a huge American player. They have their interest in totally different fields, but their investments are also typically motivates different players to change their strategy. So they go in for 1.176 billion that was announced just 2 weeks ago. And American Dynamism, it's a fund that have 80% of all VC dollars in 2025. Going through it. So a lot of players, bigger ones that we know, Sequoia, Founders Fund, 8VC, and so on, look into that. And what you need to understand also that a big chunk of European funds also could be American money. So these options need to be in focus too. 60% of bigger rounds also involved US money. So that means real veto rights, real board influence, and real IP control implemented. When we talk with, in our expertise, when we talk with Ukrainian founders who are early stage and they go, okay, we want to go to Europe, some Europe country, let's choose where it will be okay, and then we will go to US and raise in US. It's a good strategy in general till that point when you see correct statistics and correct situation for your company, for your specific options. And here is the thing, it could be a good option for some companies, but for some other companies, be totally European could be a good option. Go for Asian investors could be a great option and much more technologically wise. For some of the companies going for M&A and private capital for these deals works better than taking VC's money. So list of options for dual use as big as it's for other companies and even more interesting in some way. So what are priorities? What is now actually interesting for investors? We think drones, defense, AI, and counter-US, it's something that we see in each one of portfolios, most of the companies. Drones was understandable choice because it's easy to see as a hardware company with understandable results and a lot of money already in. What does it mean for you if you from these fields? It means that you have a lot of references that you can look into, a lot of different companies who already in the market, a lot of different companies who already raised funds. So what's important here is to look into all this market movement and see for yourself what difference you really bring to the table and what benchmarks in this market you already have. So for this type of companies, it's much more crowded, but much less needs to be explained. So there are some preferences. On the other hand, if you not from these topics, it doesn't in result means that you don't have option to get funded. On the other hand, you can be funded even a little bit easier because it's not something that already caused a lot of setbacks as AI, for example. So also few hot topics, but with questions. Quantum cryptography is genuine European sovereignty position. 88 of global quantum cryptography VC sits in Europe. So if you look into quantum, Europe is definitely a good place to be. Over 1.6 billion went into European quantum just last year. And there are quite a few big players already there from photonics and optics, hypersonic and propulsion. Also, the slots were policy capital wants European founders, and the founders still not there. AI chips and processors. Europe here, it's 6% of global VCs. Sovereign compute lives or dies here, but you don't have enough companies that look into that. Most of them or in Asia countries or China or US. Space launch vehicles also in really interested topic and hugely supported through different instruments, including grants. 12% laser is standout, but Europe needs 3 more like that. So all topics where Europe needs to be will be supported. Drone 25% Europe, we see 33% US. So in drones, even this crowd category, structural share is half of what really needed. Good place to look into is recent deals and benchmarks. For example, European Defense Tech Benchmark through A through D through 4 years. So it's 4 rounds in 4 years. For 24 Series A with evaluation of 102.5 million. First German MOD contract within 2 years. 2023 Series B, 209 million. General Catalyst lead. 2024 Series C, 450 million at valuation of 4.95 billion. And in June 2025, Series D, they take 600 million and 12 billion evaluation. And 80% it's European owned. So now, few months ago, May 2026, they reported 1.2 billion fundraise at 80 billion evaluation. Dragoneer lead was oversubscribed, and Brandware in February 2026 was 269 initial contract, framework up to 1.46 billion over 7 years. So this is a record. Yes, I understand it looks like something really huge, really big, and not so achievable. But what I want to show here is that dynamic is totally changing. It's much quicker, much bigger than it was years ago. And now dual use and defense companies have access to much bigger rounds with more option of capital. And M&A cases for companies who acquire smaller one and squeezing in the middle. Quantum Systematic raised 340 million in 2025 alone. Series C plus extension led by Balderton and 3 acquisitions. So a big part of their raised fund was targeted to acquisition. Stark Defense raised 500 million with evaluation 3.5 billion. Have Sequoia Founders Fund on board. But failed their live fire test in November 2025 and cautiously tail on valuation and fundamentals. Arix Robotics have ground robots and fully European supply chain. That was a big breakthrough. The selling points specialists now expect. Take over 1 billion plus unicorn with NAF and Bally Gitford and 40 million UK pledge plus RF deal. All these examples can show that it's totally achievable now, and what it also shows to founders that typical structure of venture raising, it's not obligatory for dual use, as well as typical private equity deals. Most of successful big dual use defense companies now have mix in their development between fundraising, direct VC fundraising, M&A, and business development in the middle. Big exits, also interesting thing to watch. The marquee European Defense AI exit at the prime acquisition template, as I see it, 220 million enterprise value, 28 million in 2023 in sales, 22 staff at the close, and amplified 8x revenue multiplier. So it's also somehow a benchmark to how these companies will be sold in the future. Renamed Shafran AI, folded into Shafran's defense and space technology business. Oliver Andres, founder, called in a step change. Founder takeaway in the result, it's multiplier 8 of revenue. Prime present, clean exit. But the founders not included into future development of a company. So what this case show us? That option now, it's pretty clear and understandable that you can not only build, develop, but also sell and have a clean exit from dual use defense tech military related company, something that was not so obvious a few years ago. And now we have pretty similar conditions for deep tech startup and dual use company. And also, this is an important part that every founder needs to think about, how you will exit before you are raising, seed round A. And at least, what are investors looking for? There are a few things that you need to show when you go to investor. First, it's dual use commercial revenue path. You understand how to be able to sell, demonstrate customer traction, show existing clients that already understand that your product will be needed. Software AI autonomy mode plus ability to manufacture at production volume. Big challenge for a lot of European dual-use companies, not in the technology, not in idea development, and even not in the marketing. It's access to production facilities and how to be able to have volumes that your clients expect. Also big point, it's European supply chain sovereignty. It could be not so obvious right now, but maybe already is. You need to be able to supply everything you have within your partner countries, not outside of it. And last but not least, it's a mission-driven team with both military and scaling edges. You can't run only on technology or only on business understanding. Few main fuck-ups, as you see, for things that kills defense tech round before it even started, before you formally need term sheet. Government contracts only, no commercial pass. It's hard to do both. It's even harder to maintain it in the right way, but only on something one, you will not be able to become a bigger company. Other clear mistake is no path from prototype to production inside to fund cycle. It's a big hurdle to go from one to another. Pure weapons exposures at tips, LPs and ESG screens. Cluster mentions and landmines remain red lines. So yes, part of so needed production still remains in this small field where before 5 years ago, all dual use and defense company was. So it's still some red lines. It's still something that needs to be tackled in a different way. But it's also important to show your strong sides and be able to explain what you really do inside the company. And last but not least, cap table or IP structure that leaks to US owners, or if sovereignty is part of your pitch, you need to be able to maintain it. It works both ways. If you raise in US, they will be interested you have everything in US as much as possible. If it's Europe investors, they will look into European sovereignty as much as possible. So you need to have replies for each part of cap table or IP that outside of main investor scope. And what you look into in 2026 as a company that rises. It's venture moving faster than procurement. And if we talk about, doesn't matter, US or European buyers, they will take months and years to complete all due diligence and sign contract with you. And key question is not the total addressable market, is what the operational delta. It's a question where you will be able to sign a contract. And this question will be interesting to each one of your potential investors. And customer pool validation is a real test everyone looking at. If you're not in a field, you can be even not able to get there. And a few tax and financial foundation. I hope Dmitry will join us in the next 15 minutes and share some additional things. But what I wanted to show you is that big amount of financial instruments, both dilutive and not dilutive, is connected to your structuring, and it's really important to show your full compliance and have all needed documentational block for eligibility and access to procurement on one hand, and other financial options, including loans, on other hand. A few countries already changed and make easier for dual-use companies to structure. Also adding support mechanisms and form of investment or insurance for investors, so they will be insured through investment process into your company. Also, as I mentioned, it cannot be your main point of choosing country for structuring, but it's also something you need to consider. What founders underestimate in EU grants cash, it's pre-financing plus reimbursement, the trap and the gap in the middle. This is what takes you. Anton will walk you through options that you have, but main thing that I wanted to point out is when we talk about all fundraising process, is really important to understand three main cash directions, what your participation in procurement looks like, what your non-dilutive financial will looks like in a calendar, and what investment will looks like. And all these three parts, it is really need to be synchronized, because big part of companies go into oblivion, not because the technology bad or because they don't know what they're doing. No, it's just a gap in the budget. I will skip this for our colleagues. And few other things that I wanted to mention for you is two operating constraints founders cannot afford to learn in a hard way. EU dual use regulations was updated late last year. So they included semiconductors, cryogenic, quantum into a list of technologies. Intangible transfer count, emailing source code to cross-border tech support can require a license. So part of companies that wasn't required now does, and this is a huge step you need to count on. I will also want to mention some part of Ukrainian ecosystem as also a great place for structuring your dual-use company. Not only because we have pretty good support system from government side and battlefield proof options that are not available in the most place of the world, but also because it's a great option for M&A and collaboration with existing teams that really can boost your technology development. Few points you need to look out in the next 12 to 18 months. New funds will emerge and open to finance. And few new grant options as European Innovation Council announced grants that also work for dual use. Neoprimes buying smaller players, and this means that other big companies will look into M&A or total acquisition. And also defense semiconductor omnibus and annual export control list updates will change logistics in a harder way for some companies. In procurement from reform delivers, sovereign capital deepens, neoprimes scale, and startup revenue finally unlock production volume. So what few signals you need to watch? It's M&A only exist environment that persist and will be growing, but also European defense IPO will emerge in next year and a half, and the winning bets in order: autonomous system at production scale, defense AI and software platforms, contra US, and sovereign compute and chips in Europe. It's all these topics are or hot or really need to be closed at the gap. So it's something that you should look into. And maybe a last thing that I want to mention is that sovereign tech, it's something that we didn't think about a few years ago, but now is a first and foremost priority. Also, I will share my presentation with you and you will have list of recommendations. Feel free to ask questions or direct them to us. We will be happy to help you structure your dual use company in the right way. And if we don't have questions for now, we will be happy to go to questions of structuring. Dmitry.
Yes, Tatiana, thank you so much for opportunity. Thank you for your organization and the opportunity for me to provide report. My topics is additional comments to the previous colleagues, especially for Bulgarian colleagues, how Ukrainian miltech business arrange or structures abroad and why all in all it is necessary. Currently, we provide services around 15 Ukrainian miltech companies. They are rapidly growing, enormously rapidly growing. And in principle, they have two major problems or dangers. First is nobody knows when the war finishes, while the main opportunity for Ukrainian companies is to check their weapons, how they work. And of course, once the war finishes, they may come across the decrease of the respective order from our government. So they have opportunities, huge opportunities. They have big money, very big profits, and they have rapidly growing revenues, but they have risk that everything or big part of it may be cancelled in unknown perspective. Therefore, the major task for such companies is to structure in such a way that it should be possible to go to the external market. As a matter of fact, Ukrainian government currently not very happy of such opportunity because they would like to monopolize the export activities of our miltech companies. Therefore, from time to time, they warn miltech companies that if they start exporting their production, so they would be punished somehow. We understand that there are different ways how to influence them. For example, to cancel the respective order from the government, Ukrainian government. On the other side, our government proposed and currently implemented the new legal and tax regime for military companies, so-called defense city, which provides some tax exemptions for the companies registered as the producers of military or dual-use production. And inter alia, government promised to mitigate the possibility of export control. That is, companies in this regime defense city will be allowed to export their production abroad. The regime is very fresh, and currently we know few companies which join this regime. The other check the situation and try to understand how it would be convenient. But anyway, it is an option, and it is the solution for this problem. How be scalable with the productions, which is checked at the Ukrainian front line and may be useful somewhere abroad. The next option is to structure the operational companies in some other country, and as well holding company, and maybe a IP holding, because as a matter of fact, the dual-use production and military production is not only material goods, but to much extent it is IT content, which allows to work for these products. Therefore, we come across the assignment from our client. Please provide us with the guidelines in what country we should set up the production as such, except Ukraine. Where should we start up holding in order to somehow link the production in Ukraine and production in the other country, and if necessary, where we should start up IP holding company, which will possess the respective software and maybe some other objects of intellectual property, like patents, like trademarks. And we understand that these three functions, production, holding, and IP, not often we have one country which can provide equally good preferential regime for all of these three functions. If we speak of production, we currently check to less extent the regime of taxation, like corporate profit tax and personal income taxation or payroll taxation. Why? Because more important criterion, we believe, it is the opportunity to roll out dual-use production and to obtain the respective licenses from the government. In other words, whether the respective country is loyal for the opportunity to be the host for Ukrainian dual-use production, Ukrainian-originated dual-use production. Currently, we indicate top three countries which, on one hand, is loyal enough, and on the other hand, have quite a big combination of the other criteria for which we can choose them. It is Poland, it is Lithuania, and Czechia. I repeat, for us, the most important criterion for production is loyalty for obtaining a respective license and possibility to start the production quickly, not late. For holding companies, we choose principally other criteria. This is the taxation of incoming dividends. It is taxation of outbound dividends. Well, the taxation of capital gains upon the sale of the shares of subordinate companies, and maybe the taxation of interest upon provided loans or royalty against provided licenses for trademarks, softwares, and so on. But the first three criteria, inbound dividends, outbound dividends, and capital gains, are the major for this task. And therefore, we have top 4 countries where we can see that these criteria are working quite good. 3 of them are the countries with Anglo-Saxon law system: Malta, Britannia, and Cyprus, and the 4th one is Estonia. And if we say that we need some additional company as IP holding, we checked the respective regimes of taxation for royalty or remuneration for IT services or for end user license in certain countries. And if we speak of IP holding, the most interesting for us is Cyprus again, Malta, and to a certain extent Hungary. But as a matter of fact, currently many countries provide some preferential regimes for IP companies, and therefore we should check regularly the changing regimes for identification of the best or better one. And then we need to combine all these functions in countries all in all: holding, production in Ukraine, production abroad. As to the report of Bulgarian colleagues, we understand that Bulgaria is quite a good country from the point of view of corporate profit taxation. As I remember, 10% of corporate profit tax and 5% of withholding tax upon outbound dividends, and it is good. And we will be happy to include Bulgaria to the list of the countries which are loyal and therefore available for place in production. But it, again, I repeat, depends on the treatment and treatment of their government and readiness of their government to provide with respective permits for conduct of the respective activities. Maybe it is all my remarks as to our services related for the structuring of MilTech or dual-use production. Currently, we have lots of work. Around 2-3 companies come to us and ask how to arrange everything. And about 1-2 of them place orders, and we try to analyze, to structure, to make roadmaps, and to implement our recommendation for them. I thank you for your attention, and thank you for Tatiana for opportunity. And I see the next speaker, Anton Doctorov, is ready to proceed with his report. So, Anton, the floor is yours.
Yes, thank you, Dmitry. Okay, so my previous colleagues shared with you all necessary information regarding possibilities how to structure abroad, to use the possibilities of finding additional sources of capital. And one of such sources is non-dilutive funding, as Tatiana partially already mentioned and shared some brief details, but I will try to be deeper in this topic. I hope that you see my screen. And in next 20-30 minutes, I will cover the grant side of funding, what we call non-dilutive funding. So generally speaking, currently there are few programs that you can apply for. But you should keep in mind that they are not constant, and some are editing, some are changing, some rounds are closing, so you need to follow them to be aware what's actual now, and we can surely help you with this. And today I would like also to speak regarding your ability to apply to these programs. I want to share with you a way how to make decisions, how to choose such programs, and how to be able to analyze and consider whether its grant, this fund, is worth of your time, why some applications fail and some succeed, and how grants fit together with real commercial growth. First of all, I want to share and one idea that non-dilutive money is not free money. You should understand this, that non-dilutive simply means funding you receive without giving away ownership of your company. But that can include grants and co-finance researches, some repayable advances, and donor funding. But the danger is that when you hear the word grant, you stop thinking critically, and you think that it's free money. But for sure, grant is earned, and you pay for it in strict eligibility rules, in co-financing that is usually real money out of your own pocket. And it's detailed reporting that has to stand up to an audit. So for dual-use company, a good grant does 3 jobs at once. First, it funds work that is otherwise hard to finance. It's early research, it's testing of your product, and you can receive it before you receive some revenues. Second, it sends a signal because winning a competitive grant is a proof that your technology is credible. And that helps you to lower the risk in the eyes of other investors that you are planning to join, who plans to join you. Yeah. Third, it's open doors to partners. It helps you to find some test sites, end users, and those procurement channels that you were not able to reach on your own. So you should understand that these 3 things are great possibility for you to improve your current situation and to be more investable in future. So if we talk about current possibilities and we can see current dual use funding map, I have grouped them into 3 lanes. The first lane is European industry and innovation. The biggest program is EDIP. It's European Defense Industry Program, and it has around 1.5 billion euros in grants for current year and 2027. And first calls are already open, so you should not waste this possibility. There is also Agile. It's a 115 million euro program. aimed at disruptive technology from startups and smaller companies. And there is also equity support for MSMEs through the Defense Equity Facility. The second lane is Ukraine and the light funding. So it's Brave One, the main domestic engine with more than 540 grants awarded so far. It's focused on prototyping, validation, and testing. Brave Tech EU connects Ukrainian and European innovators, and Unite Brave and NATO funds joint bids between Ukraine and allied companies. And the third lane is national and donor-backed funding. This covers national innovation funds and programs from institutions such as EFC and EBRD and accelerators that include grant money. So, but you should keep in mind that this menu, yes, changes constantly, and you should know how to test quickly whether some of these lanes fits your current situation and your company and your product. So before you start writing some applications, you should understand, is this grant worth pursuing? Yeah. And I prepared like 5 questions that helps you to understand whether you should go for one or another grant. And first question is strategic fit. You should understand if this work that you should do for the grant, you would do anyway, because it's part of your roadmap, general roadmap. You should be ready and understand that this applying for this grant won't pull in you off your course, and you should be able to analyze and see if chasing this funding won't change your course. Yes. So second is eligibility fit. You should see if your company and your product meets the basic rules. It's the type of company, the country, the ownership, the technology stage, some other requirements. This like simple yes or no. Check it first to not waste time and to not try to apply to the grant or funding that you are not allowed to apply. Third is readiness fit. Can you produce the evidence to the founders regarding your financials, your working prototype, some test data, some your staff, your team? Fourth is economic fit. It's is your current situation allows you to be able to get this co-financing, because it's your time, it's time of your team. You should understand that you should report, you will have some audits, and when you apply for some small grant but with heavy such duties, you can simply lost more money on these procedures and also lost a lot of time. And fifth, it's capacity fit. Do you have enough people to not only to apply for the grant, but deliver the work and without any harm to your main activities, which helps you to make some money, to pay the salaries to the team, so etc. All this like basic stuff. So you should understand that to not apply because you don't correspond to some of these blocks is not a failure. Sometimes it's good result. In my work, I work a lot of on researches, and here we have the same principle. Sometimes when customer comes to me, client, and asks to do some research if their product can be sold on some market, and they are sure that yes, it can, and there is a big demand, and the product is good, but after the research, we have in the end we have answers that it's better not to go there and not to start selling there because you will spend more resources than gains that you will have in the end. So no is also a good answer because it saves your time and resources. So once you answered the 5 questions, and you should next prioritize which programs you should better apply to, because you cannot chase everything and all the programs. So you should understand what is the correspondence between effort and impact, where better spends the energy. So this slide shows how you better evaluate the possibilities that grants can give and the effort and cost to win and deliver. So when you see that it's high impact and low effort, you should go to it now. It's very rare, but when you see it, you should act immediately and go there quickly. If you see high impact and high effort, so you should build toward it, because most of dual use grants sit here in this category, and you should prepare in advance. You should sometimes form consortium. You should run a pilot. You should send a letter of intent to the call even before the call opens. So you should be ready and put some energy and resources into it. But if it leads to high impact, you should do this. So low impact and low efforts, it means that here it's like some opportunistic, only you should do it only if it builds some track record for you, because as I mentioned, receiving a grant, it's credibility of your company, of your product. So if it's builds your track or it's brings some quick cash, which helps you to make some quick steps ahead, then you should do it. And the last, low impact, high effort, you should just decline it. Say no and don't spend your time and resources. So how do you know if you are ready to be funded at all? Main 6 honest signals that tell a founder that that the team that applies can actually deliver the work and product. So first of all, as Dmitry told us, other colleagues told, legal structure that matches the call requires. So it's very important to have legal structures that will meet the requirements of the grant. Second, be truthful about how mature your technology is. You should be honest regarding technology readiness level. Overstating is one of the fastest way to get rejected. Third, it's clean finance, accounts, cost records. you will for sure be audited, and you should be ready for all the questions that auditor can bring with them, and to be able to pass the procedure. Fourth, it's a real team with real people and ready to spend real time. It's a big mistake like to apply with some list of borrowed just for application people. You should be sure that you can your team will work max and on the project. And fifth, some evidence of the traction, test results, some serious customer conversations, maybe a letter of intentions to buy your technology, your product, for proof that someone beyond the founder and the team believes in the product and technology. And six, visible approach to compliance, export controls, end-use rules already considered, to be sure that you are not improvising after the win. The best way is when readiness is built before the calls, not during applying to it. So it's to save your nerves and preserve your nerves and your face before investors. So now we talk why applications fail, like main problems which you can face, and what reasons why even strong teams get rejected. So as I already mentioned, the first layer is almost always it's registration and legal documents. Clear project description, work plan, detailed budget that shows your co-financing in some cases, yes, like when the program needs it. Schedule of milestones and some standard declarations, so everything to prove that you are ready. The second layer, it's like on top of the first, it's some consortium agreements with your partners, evidence of testing and your technology, security, intellectual property, plan how you will bring the product to the market, and how you will act on the market. Practical move here is simple. You should prepare all the information and keep this data up to date, because 70% of materials is reused across applications, across different programs, and you just prepare it once, prepare it properly, and this will be very helpful in your all further activities. When you start every time from the scratch, you can miss the deadlines and miss the opportunity to apply to some grants. So main reasons why most of even good teams are rejected. So it's eligibility and formal mistakes, wrong company applies, missed deadline, some required document missed, and this kills the application even before someone started to read it and check it. It's like embarrassing, but completely avoiding it's like on your own responsibility. Second, it's poor fit. The proposal did not answer for the actual call. And usually because you used previous application and information for it and didn't update it, and evaluators will spot this immediately. Third, it's like weak case. It's like no clear targets, unrealistic budget, technology readiness level that overstated, as I previously mentioned. Fourth is weak capacity or credibility. The founders' real fear is that you win the money and then fail to deliver. So they are interested in your success because your failure becomes their problem, and they lose their money for nothing. So all of these reasons are like you can solve them, you can control them, they are fixable. You just need to keep everything within your control. So how to build a funding roadmap? First of all, a roadmap is really about matching the right type of funding to your stage of growth. So if it's like on the stage of idea and early research, use small grants, price competitors, early break-even support, some accelerators. Here, non-dilutive funding does most of the work, and you are building signal and starting your journey. Second, it's like stage of prototype and validation. So here you should look for innovation grants, Brave Tech, Noto Diana, and research tech incentives. Now you combine it with your pilots and future steps. Third, it's like pilot and first contracts. Here, bigger instruments are opened before you. It's Agile, the EU Defense Consortium, Unite Brave NATO. So here you are on the way to the top. And the last one, it's like already scale and production. So you are looking for a deep production support, procurement frameworks, equity. Here, real revenue leads and capital follows. So you should match the instruments that you are using to the stage on which you are currently existing. Yeah. So some moves that can help you. So grants take the risk out of research you could not easily found with equity. So you keep more ownership while you prove that technology works. As I mentioned before, every win, it's validation. Each grant secure lower risks for investors, improves your terms when you raise further money. And traction unlocks bigger grants. It's like your history of your journey and every next step. And bigger grants want to see this history, and then you will be like investable for bigger grants. But you should keep in mind that on part of this funding, you should have some co-financing. You should have real money that you are ready to co-invest. and be ready to be in partnership with the funding. You should also keep in mind that grant timelines rarely match with market timelines, so you should stay on your roadmap and not let reporting or grant conditions pull off your course. And you should respect the rules of combining funding. You cannot find the same cost twice. Done good, grants attraction build on each other. Done badly, grants become distractions that burn your previous all efforts. So to make all this work in practice, few habits you should keep in mind. First, keep a live pipeline. Score every opportunity against the 5 fit questions I wrote about, and your chance of winning and will increase. Second, keep a standing data room, the one that also I mentioned. It's you can refresh it every period of time, and you will never prepare, in this case, you will never prepare docs under some deadline pressure. Third, use the grid to decide, and you really use the decline possibility option if you are not ready, or it's will lead you to suffer heavy losses of your time and your resources. You should just decline it. Match funding to your stage, as previously mentioned, and you should understand the loss that company funded only by grants, it's not a business. It's for this period of time, it's just a project. So you understand that you should move into business type. You should think about revenue, about sales, about market, not only how to apply for another grant. So key takeaways to finish. As I started my report, non-dilutive funding, it's not free, it's earned, and it carries a cost, so evaluate the net. Second, check fit before you spend effort, all strategic, eligibility, readiness, economic, and capacity. Most rejections are avoidable. They come from poor readiness and poor relevance, not bad luck. Match funding to your stage and stack grants and traction into a flywheel. And fifth, grants by your runway, credibility, and access, but they are not a business model on their own. So if you are looking for some grants, if you work on some dual use projects, we can help you. We can help you to understand on which stage you are now, which grant and program you can apply for. We can help you prepare this data set, which you can use in future. We can help you create legal structure that will allow you to apply for grants and to communicate with other investors such as Tanya told you before. And if you need any assistance or any help in this journey, please you can contact us and we will sure try to help you and share our experience and best practices. So it's all for today that I wanted to share with you. If you have some questions, please put it. You can put it here, or you can send it to our marketing team, and we will answer them lately.
Thank you, Anton, so much. Non-dilutive funding is a big part of options for early stage financial models for dual use and defense. And now more than ever, it's really great to have access to it. Thank you so much for being together with us. Please leave your questions and comments either in the comments or in email. Thank you for being with us today.